Good morning, traders. Thanks for joining me on this Trader Bite today. It is 8:04 a.m. Chicago time, coming at you from Chicago's financial district. We are looking at episode number 2034 today. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's jump immediately into the convergent trading pre-market summary sheet. Pre-market summary sheet here. We see that the market is in a mild risk-off sentiment. The Nasdaq is holding really tight to yesterday's settlement as much as it can. However, the European markets are really driving lower. We see the DAX and the Euro stocks down over 1%. I'm still dealing with this new PC at work, new setup, so sorry about the delay there. We're heading off 4 minutes late. Today, again, allocation is to safety. The bonds are up 30 ticks. The 10-year notes are up 7 big ticks, 14 small ticks. And then we see allocation to metals, gold, and silver slightly. Crude has come off since yesterday's delayed crude oil inventories, EIA inventories number. Tried to trade that number, and it just took forever to come out. While we're at it, maybe you can tell me if the sound is okay or if I'm blowing out your speakers. I get the feeling that I'm probably running a little hot. Let me turn it down a little bit. Again, mild risk off. This morning we did get some key releases, key economic releases. We got U.S. Bank Corp, U.S. Bank Corp, and others before market today, and we're looking for Alcoa after the market. Alcoa is expected at $1.34, $2.64 billion in revenue. Morgan Stanley, Bank of New York, United Healthcare, the other primary releases. So we're in full swing when it comes to the earnings season, and this is one of the drivers as listed here. U.S. inflation pressure, as well as earnings, are the key pieces. Looking at what's ahead, in about 8 minutes, we get industrial production, which is a second tier number. And then we get Fed's Chair Powell at 9:30 Eastern, right at the open. And then where the calendar's clear all the way into the Alcoa release. And then we go into the Bank of Japan interest rate decision. And that's what's on deck for today. As far as where the S&P is, the main index and our focus, the S&P is trading at 229,000 contracts. The inventory is 84% short, with 25 points of range, 25 above the range mode, the 252-day range mode of 23 points. When those numbers exceed, they turn blue, get a blue background and white writing, white text, to highlight that this is a kind of an elevated activity day. So 231,000 now, and 25 points with 84% inventory short. So we're looking at an opening that's likely to be relatively active, which is nice, following yesterday's close, which had a $2 billion market on close imbalance, yet traded completely sideways in the last hour. Very frustrating kind of trade, where you could start to sense that I was starting to feel a little bit triggered, I guess. So I stopped. But overall, this morning looks like we're tipping on the edge of imbalance here, as we are opening the S&P below the prior low a day, below the full session VWAP. And in fact, I'm going into the review segment ahead of time. Let's take a look at what happened yesterday real quick. I don't want to spend too much time on this. I'm sure most of you are here to talk about what's likely to happen today versus what we saw yesterday. But yesterday, it did a couple of interesting things. It pushed the prior day's all-time high of 83.75 by three ticks before it put in a weak local double top high and then moved away from it, and then it started to retest the mid and VWAP from below. Look at this structure, just really beautiful. Pushes back into the full session VWAP, and then we get our first main impulse to the downside. And what does it do? It pokes through the prior day's low. So we had yesterday versus the prior session, we don't see this often, we had a bit of a neutral day versus the prior session. Versus the initial bounce, we had a normal variation day, a selling day yesterday overall. But what we did is we tested and couldn't find buyers above the all-time high. We tested below the low of the prior session, couldn't find sellers that were remaining there, and we moved to what is now the MC point of control at 43.70. If you're a Conversion Trading member and you were there for the trade talk on Tuesday, we watched live during the session and we talked through the trade around the pullback to 43.70. We saw how much activity occurred between that 70-71 range. And then what we did for the rest of the session is we brought all of these numbers, all of these market generated values into this exact area. Very compressed, essentially. And in the morning, by the way, we had sweeps of about 2,500 contracts. We had sweeps down of 2,500 contracts. We had another sweep down of about 3,000 contracts. There was a pretty decent seller in the 80 down into 74 range, and it just seems like sellers were coming out of the woodwork right at yesterday's open. Very difficult to hold the long, although it looked like it was a push higher, took out the prior high, pullback continuation type trade into 43.90 and potentially 4,400 yesterday. But that didn't happen. It instead went back and it held steady right on top of the point of control of Tuesday. So yesterday we built a point of control right on top of Tuesday's point of control, which was what? 43.70. We have balance here, market testing up, down, and getting stuck in the middle. This is very important information that we're getting from the market. And now we are trading below here. We're trading a 43.54, yesterday's low of 58.50. The low of 2 days ago, two days ago on the CPI was around that 54 area, and the overnight low is 43.50, the mid-century figure. So there's a lot of structure here, a lot of information, useful information. The range overnight was relatively wide, 30 points the prior night. And so this day here showed us that that there's both sides are active, and then later in the session, the day time frame was in control. That's how we ended yesterday. We ended in a balanced profile in the overnight in the session, taking out the overnight stat, taking out the IB stat, and holding above the 43.50. That was yesterday. So sorry, I'm confusing you here with the sessions. So since then, what have we done? We opened back up, came off of that 67, 68 area, consolidated during the Asian session, again to the sell side. And then when Europe opened, there was an attempt to push to into that 70 again. Remember, the 43.70 is now really important. It tried to push into the 43.70. Very good structure here, and then we get the sell-off, which was an impulse, and then we're in the middle of the pullback against the against the full session VWAP and the full session mid. So very easy to gauge what's going on right here as we open. We're paying attention to this 54, which was tested after the Europeans came in. 54 buyers came in. We then test the 70. There's another clear line in the sand. Very good structure. And then we are pulling back. We're attempting to pull back to the mid and VWAP. We're staying below. We're staying below yesterday's range. It's very important what it's doing right now. I'm looking at the order flow, and it has traded quite a bit at 43.51.50 and 51.75, giving us the point of control, the overnight point of control, and that at that location, at the 51.75. So there's a fight going on around this 43.50, which we held yesterday in the overnight session, and now we pushed through. So we've expanded the range downwards, and it looks like, given that we rejected the all-time high yesterday, very clearly, the sellers might have moved the needle a little bit in their favor where we are. However, let's not lose sight of the fact that on the weekly, we're still one time framing up, and actually we've been balancing since the beginning of the week. We've been in this balance into Friday. We came up here on Friday, and we've been in balance inside of this big rectangle. So don't forget that. And when the market's in balance, it can easily go from the outside and come right back in towards the middle of the range. Where's that middle of the range? Take a guess. I'm not going to wait for your answer. It takes too long. There's too long. There's about a 7 to 10 second delay. Where's the middle? 43.70. So what's your job today? Watch how it treats that 43.70. We want to make sure we are locked and loaded, and we are aware of how the market responds to 43.70 if it gets up there. If it fails to get up there, there's a great opportunity here for 43.05, which is 50 points below, as the next key test area. So we would take back Friday's action. We would take back a lot of Friday's rally. That was a clear trend up rally day. And we were likely to revisit all the action. That becomes a template day below 40, and we would slide our way down towards 43.05 and the 4,300 century figure. So I hope you can follow what's going on there. Yesterday, we ended up with a negative delta on a relatively neutral close. The market closed right in the middle of the range. A lot of consolidation and coiling there. So it's very important to see that this thing is relatively weak this morning, which I welcome. I welcome a market that's rotating both ways. That's just a great thing. It creates opportunity, and of course, opportunity in trading futures means opportunity for gain as well as loss. So you've got to manage your risk, okay? So that's where we stand. A quick, wherever it is, my composite. A quick look at the composite as to where we are. See how it's consolidating up here. There we go. Let's zoom in. See how it's consolidating up here. What's the number? 43.71 on the MC point of control. That was yesterday's point of control, the day before's point of control. That's the number we want to watch. And the question is, since we have this elongated week from last week and we have a gap down here, we have a little bit of a weak structure below us. Again, with a trend day, trend days leave a weak structure beneath or above, depending on whether they rallied or sold off. With that, and the fact that we are moving away from this very Gaussian, very normal distribution type profile at 71 point of control, to me, if it pokes in into yesterday's range and is not, and buyers don't come in strong to push into 70 and hold above 70, sellers are likely to come in. You heard it here first. Sellers are likely to come in, and they're likely to push down into the gap the gap zone, and then potentially down into this area down here, giving us 4304, 4305, 4300, and then push through the 4287, and so on and so forth. This is how things are structured right now. So that's what we're looking at. I'm going to pull up and look at what the order flow looks like this morning. We have some pretty decent offers up above, nice blocks set up there, pushing higher into the 70. Looking at the 70, you can see the 70 is pretty crowded. There's a lot going on in this area. This is the area, this is the big line in the sand. Yesterday we settled right here at 67.75. And if it's not able to push higher, then what's in the way below? What's in the way? 43.50 a little bit. We have a bit of a bid here that's relatively fresh. You can see it's kind of sputtering in and out, not expecting that to rest. And then, you know, from here, we're looking at the overnight low at 45 for the overnight low stat. And then from there, it's likely to run a ways. The range expected on the downside is at least 30 points. 30 points on the downside. Look at the structure here. This is the area I just said was a big battle area right there. This area of the overnight point of control. There's been a pretty decent fight right here. The delta, we're seeing small lots dominating on the short side, large lots, which are 10 to 99 lots flat, and very large lots buying into this rally right here, and it's still building an inside bar as we sit here. Looking at the overall picture, again, there's your cumulative delta. You can see how things are split. The rotations are pretty decent to the short side, and they're starting to expand to the buy side. This is a market that is completely coiling here, and that's how we're opening. So I'm going to reiterate that I'm expecting the open to be somewhat active. The open is out of balance. We're opening below yesterday's range. We're opening below the VWAP. We're opening below the mid, and we're likely to see an active tape as we come into today's session, and as we head into what we're talking about here in terms of a trading plan. Let's take a look at what's expected for today so you can run off and prepare yourself for the trading session. Hopefully a lot of you attended the Jeff Tendler webcast yesterday. It was also pushed to YouTube. Those of you who registered should be receiving the recording shortly. I invite you to go check out Convergent Trading's YouTube channel and listen to what he's saying. A lot of this preparation and technical analysis and whatnot isn't going to get us anywhere if we're not ready to trade it. We're not ready to see it, right? So again, let's mark our key areas up here. Let's do it in white just for a change. Right up here, we've got the 70.71. This is your LIS line in the sand. This is a key area. We have the VWAP mid converging at 57.58. Let's call it 58. This becomes the first test area. Yesterday's low at 54.50. We're currently trading at 51.75. And so as we open this morning, and then the key test areas below, the big test area below is 42.20 right here. That would be my key target. My key target to the downside, to the short side. And if this thing does not hold the 70, then we're looking at the 84 to the upside. 84. These are the main goalposts, or the main destinations, the main points of inflection for today. So this morning, Open auction right against yesterday's high. The expectation is a responsive push into this 58, consolidate it to 58, potentially fight and an attempt to push back into balance. The expectation is, even though we're opening below and we've broken the one-time framing on the daily, we still have a trend on the weekly that is up. The expectation is that the market is going to likely seek balance, and this becomes an outside-in trade. Trade from the low long into balance, and the expectation is it's likely to push back into the close and into 70 before it consolidates. Later in the afternoon, I'm expecting it to push lower. Why? I'm expecting that to be a continuation of the peak from yesterday, the lower peak from the overnight session. I'm expecting it to start forming this push lower to clean up the structure below. It doesn't mean that the trend has ended. It doesn't mean you should get short as many contracts as your broker will allow. It just means that the market is likely to have a healthy pullback. Secondary open auction, small attempt higher, pushes lower, gets the overnight stat at 45.25, consolidates at 45.25. Then we get one of those impulsive pushes up we've become familiar with, back into the overnight point of control, consolidate there again at the overnight point of control, higher low, secondary impulse back, and then the target for this, we end up going from about 40 on the low, 40 to 70, and then we're back in balance. This sets the buyers up for tomorrow to push into the 90 and eventually 4,400 if that's how we end up. In either case, we're opening out of range, below the range, and we're expecting a test of the overnight yesterday's low. Again, the 57.75, 58.50 area, that's the full session mid, full session VWAP, and yesterday's low, or the low area, the prior low area, not yesterday, but the session before it. There's a lot going on in that 58 area. I'm expecting that to get tested one way or another, and the question is, does it test and continue to 70, which gives us 12 points of range for about a 3-point stop, pretty decent R factor, or does it fail at 58, which gives us a shot at the 45 and 40 below? And if it tanks, then we're looking at 20. Did I confuse you? I hope not. I know this was a long one, catching up after missing yesterday. Good luck, and I'll catch you tomorrow morning. Take care.